Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, November the 20th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media. But what I'm here to do is talk about the markets, talk about the economic data, how it impacts the markets, and ultimately great option strategies to put into your portfolio in order to increase your probabilities of success and increase that yield in that portfolio. It's like getting a dividend every month. Anyway, without further ado, past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's talk about the economic data across the pond. Not a whole lot to see here. There was a German PPI number, but that's not the one we're really looking forward to. We're looking forward to Friday's PPI. That is in the form of their flash estimates. That's the one that's going to really determine what goes on. We're actually going to get our own flash estimates as well for that PPI. Not the most important one that we look at, but it still gives us a good idea as to what's going on here, because this is a forward-looking economic picture. So rather than a hindsight and something like the CPI. Anyway, it came in at negative 0.2%. It was supposed to be unchanged. So hopefully that's not what we're going to see show up on Friday. Then we come over here to the United States, and we got our crude oil inventories in line with expectations at 1.4 million barrels, and we get the FOMC meeting minutes later on this afternoon. That being said, crude oil, loving the fact that we didn't see another major build, and we're seeing the catalyst of that, just a rally of $1.64 right now, basically engulfing yesterday's massive sell-off. You know, we talked about, I thought we were going to sell off even maybe a little bit more today. I thought we'd actually see a little bit more of a build too, into the lower 50s, 52, 53 area, and kind of settled down in around this $55 a barrel, which is what I've been talking about, building out this little trough in the volume area and build out a nice big rounded off area. But now we're starting to push back. It looks like we're going to go retest that $58 a barrel mark and maybe even $60 by next week. So this trend channel is really starting to set up here, where the market is in what feels like a very bullish trend. We did break out of that yesterday, but let's see if I can draw this right there, and there. So that's kind of your line in the sand. It looks like it's heading towards 60, especially with the market action today. So my theory of it wanting to stay right here at that $55 a barrel being a sweet spot, kind of build that volume node out a little bit, looks like it might be out of the picture right now, because this market's looking like it wants to move a little bit higher here in crude oil. So let's take a look at gold futures. Gold is off on the day by about $6. Again, found a little bit of a bounce. Thought we might go up and test this value area high here in gold futures. It doesn't look like we're going to be able to sustain this, because right now with the earnings that came out today were actually really pretty good, as completely opposed to yesterday's Kohl's and Home Depot wet blanket on the market, causing retailers to really slide off. Today, it looks like, the best of the breeds coming out, and Lowe's and Target really driving these markets higher. We're seeing across the board pretty strong moves today in some of the major equities. Bonds moving higher again, testing that 160. We talked about this yesterday. It looked like we were going to at least test the 160 handle. As you can see here, we are just right now toggling back and forth with that 160 number. That is a real psychological level for yields. I believe that the Fed, we even saw Bernard speaking this morning that the mandate about, low unemployment and consumer price index around 2%, all of those things being the mandate. Global is still something that they are looking at as a global coordinated effort. I don't think that they are on Trump's camp, where Trump believes our interest rates should actually be below some of the European ones, which would basically cause us to go negative. I don't think that that's a good thing. But he wants to see interest rates go lower than theirs to try and cause some more weakness in our dollar, and therefore more spending here in the United States. Anyway, that means if their currency is stronger than ours, then they can buy more of our products easier. If ours is stronger, it makes it more difficult for that to happen. But right now, big thing to watch for today's settlement is whether or not we settle in that 160 handle, because we've already talked about this before. We are seeing lower highs and lower lows on this, causing this market to look like we are in a downtrend here as well. Now, a settlement up above that 160 is going to make people think that we will test this lower high there and kind of break that downward trend, causing more people to think that we are seeing lower interest rates going forward. All right, the VIX is coming off today, albeit small. We did test that 1300 as earlier on today. We were seeing much more weakness across the board. Actually, it looks like the Dow Jones is starting to slide a little bit. We were getting somewhat of recovery. We are on that 9-day simple moving average. So the blue line there is, this is the 9-day. All right. So settling above that is pretty key, because we can see in the past, as soon as we see the markets go below that 9-day moving average, it causes the bearish trend, right? So it goes below here, first time settlement below, we get a little bit of a small trend there. Goes below here, we got a little bit of a bearish move there. So the market is definitely trying to stay above this 9-day moving average here right now, testing that, as you can see on this lower band. A settlement below that with this chart set up at the top there is something that we are going to have to keep an eye on. All right, so settlement below that 9-day moving average is going to be something to keep an eye on, because that is the short-term directional guide, if you will. Anytime it goes below that, we start seeing some bearishness in the market. So the market's been staying above that 9-day moving average. It's more of a short-term bearish trend, but a settlement below that would make one expect that we are going to go back down and test this value area high right there soon after. All right, let's go take a look at the Nasdaq. Nasdaq off by about 15 points. It is holding pretty strong. There's a few, especially the retailers, banks are still getting hurt. Target came out with better than expected earnings, Lowe's really great forward guidance as well, and we saw McDonald's is driving higher as well. Those are some of the best of the breeds right now, and trying to be that rising tide to lift all ships, but it's not really happening right now. We're not seeing that tide turn. We're just seeing some of those outliers really start to push higher. But you can see Nasdaq is off of the lows here, and again, it went down and tested that 9-day moving average, and we've seen it bounce again. So those are the key technical analysis to keep an eye on. We have been toggling that 9-day moving average here. As you can see, I'm going to draw just outside of that line. Maybe not. Maybe I should go to the arrow. It's sometimes a little bit easier. So let me see if I can draw that line there, and then kind of staying in that trough along the way. But the 9-day moving average is something that we're going to have to keep an eye on there. That lines up right here with the 9-day moving average. You can see we came down and kissed that. Now again, a settlement below that is going to cause us to believe that we would come down and test this value area high again, and kind of start to roll over if it breaks below that 9-day moving average. But right now it looks like we're going to sustain that without any bad economic tweets or anything along those lines. We should be looking forward to Friday's economic data, which is going to really, I think, determine the next several weeks' directionality, all right? Because we only get that once a month, and that's going to be the bigger mover of everything. All right, you can see overnight inventory was pretty flat. You know, it got short, and then they kind of flushed themselves out coming into the economic data and the crude oil inventories. Still tweets and everything else going from both sides, from China to the United States on the tariffs. That's really been the driver of this market right now. But the big push higher was the uplifting news from Target and in Lowe's. So you can see Target blasted off to the upside. I did play this to the upside. You know, they have been in a huge rally, but despite that, it's because they've been doing very well. You can see on every earnings, they've kind of gapped higher this year. All of that stuff with the credit cards being stolen, you know, everybody's credit card number being lost through their systems, all of that has been put behind people. They have been doing very well. I played it to the upside. I was thinking I was going to stay away from it, but then Jeff Mackey on Twitter was just going crazy. So I was like, you know what, I'll go with it. He probably keeps a better eye on this company than I do, and played it to the upside. Went into the November weeklies, sold the 102 puts in there for 81 cents. I was able to buy those back for 3 cents this morning off the big move. Theta decay, you can see we got volatility crush. Down here, this is our volatility crush happening. You can see we dropped about probably 15 percentage points, and on a nickel a percentage point, that's a nice chunk of change. That's what allowed me to get out of all of that. It wasn't theta decay, it was directionality and that volatility crush happening to get out for almost 78 cents profit there. And then we go over to low, and lows I played to the downside. Despite the fact that we go over there and look at the chart on the daily, you know, they sold off massively on Home Depot's earnings and Home Depot's forward guidance. You know, Home Depot kind of fell on their own sword yesterday with their forward guidance and everything else. Well, Lowe's comes out and does quite well on their earnings. They actually had forward guidance saying the consumer is very strong and coming in there, the do-it-yourselfer is really driving markets, and their earnings call and with their earnings really caused this to really pop higher. I mean, you can see, obviously, this is an all-time high for Lowe's, so that was great. I had great strike location in there because the volatility being so high. Went into the November and I sold the 124 calls in there. So I expected maybe we would come up and test the all-time highs if it came out well, but we blasted above that by, you can see, it was 118.16-ish. You know, that's a dirty line there. It's not probably perfect. Beating that by $3 on the high overnight. And if I break this down over to the overnight trade, you'll see they really almost immediately went there. Somebody sold it off right off the bat and probably wish they hadn't, but you can see right off the bat, market opened up way lower, and then all of the earnings call and everything else really gave the investor some confidence in Lowe's. We drove higher in that 30-minute section and then completely trended sideways. Well, I was nervous about the upside with that kind of market action and the blow off from Home Depot. So I covered this. I really got out way too early and did like I said, the November 124 calls in there for 72 cents. So what was that? The November 124 calls I sold for 72 cents. And then I bought those back for 65 cents. So it was still a profit. We got this market moving higher against this trade. You know, that's what we would say is a loser when you go against that, because I sold the calls in there and directionally completely wrong. We did get this vol crush happening, which helped me out for the crush. With the vol crush happening, that was what really saved me on this trade. I think I did the math on this. We had about 20 percentage points coming out of this vol crush here, and you know, at 5 cents, that's, you know, 5 cents times 20 gives you, what is that? I'm having a brain cramp, $1 coming out of it. So the directional moves against me with the delta and everything else, and the theta decay, because it is in those weeklies and they expire on Friday. All of that coming out, I was able to buy those back for 65 cents, which is still profitable, but that's what we talk about. Why we enter these trades the way we do, because it allows us to be directionally wrong. You know, that is directionally wrong, but this is a winning trade there. So you can see I got in for 72 cents, sold it for 72 cents, bought it back for 65 cents, despite the fact that all my directional assumption was completely wrong. The thing that was good for me was this volatility crush as well. All right, so lesson in how to really trade. You know, we can't always pick the right directions, but we can try to turn the tables in our favor in order to be right. And this is an example of that. You know, we can talk about target all day long. I was directionally right, blah, blah, blah. That doesn't, we don't learn anything from that. These are the things that we learn from. And these are the reasons why I push, why I do the trade location. I talk about strike location, why we pick those strikes, all right? Why I would pick the 124 calls on this trade as opposed to something else, buying calls for that matter, you know? That's why. All right, so that's all I got for you guys. Check out Thursday's webinar as well. It is going to be on the short call spread. We got a bearish assumption in something. Maybe it's going to be Home Depot, something like that. I'll show you how to set up that trade for the right environment and everything else. All right. So if you can't take that, take it easy.